What's going on, guys? Welcome back to Millennial Investing, and in this video I'm going to be going over Facebook and their Q3 earnings. So if you paid attention to Facebook after hours today, Facebook's stock price was going wild. It was taking a swing up and down, going 5 or 6%, and it was mainly because a lot of investors didn't really know what to make of the earnings report. A lot of people were confused with what direction the company's really going in. On some hands it's amazing, some hands it's kind of lackluster. And I'm going to be kind of breaking that down and really focusing on the points that I think are the most important, as an individual shareholder in Facebook and where I see the company going over the next couple years. If you guys like this video, make sure to like it and subscribe and, stick around, throw any comments you want down in the comment section below. And without further ado, let's jump into the video. So just a quick rundown for those of you that haven't read the transcript yet or you didn't listen on the earnings call. A couple of important things to note just off the bat. So first off, Facebook beat EPS by about 20%. They missed on revenue by about 0.3%, but that still signified a 40% year-over-year growth. Daily active users missed by about 1.3%. Monthly active users missed by about 1%. And they really emphasized story and Instagram video above all else throughout this earnings call, and that'll be much more apparent as I go on. So they're really focused right now, according to Mark Zuckerberg, on focusing on the experience between the users and not necessarily the users and their feed. So what that kind of relates to is that Mark Zuckerberg was getting a lot of feedback from the community in Facebook, and that even though a lot of the growth sectors for Facebook that were extremely profitable were making users stay on for an extended amount of time, they actually saw the average time usage of each user go up over the past few quarters. They did realize that while they might be more addicted to the service, it's definitely not as enjoyable as their end customers want. So they're kind of redirecting and making it more of a sociable impact. That is what Mark Zuckerberg said end users actually asked for. So the main issue with this is that in order to combat that, Facebook is now focusing on, say making, Facebook stories, Instagram stories, and then Instagram TV and things like that more prevalent, and so that way you can more, bond better in a community sense as opposed to just, looking at different products online. And the issue with that is that makes it much harder for Facebook, at least currently, to kind of scale up their advertisements for the direction that the company is going in. So Mark Zuckerberg said that over time, we're definitely going to be able to scale up our revenue in order to hit that mark and, just make it almost as profitable, if not as profitable as, all the ads on, say, Facebook's feed. But monetizing the other apps in this specific way is going to make it a lot more of a challenge over the next, say, year or so. And that's going to lead to, further slowdown of growth that I'll get into later. I want to point to this. So the growth for sales next quarter is expected to be at a high single-digit % decrease from what its growth was this quarter. And a lot of people, depending on what you hear online, are talking about, okay, Facebook's only going to be growing at 20% quarter over quarter or year over year or anything like that. And Facebook, multiple executives and different questions kind of really hit upon the fact yes, we are slowing down, but we did just grow quarter over quarter 42% in our revenue. And so taking a single digit, dip from 42%, you're still looking at about, a 35% growth for next quarter. And so when people are saying that Facebook is now drastically overvalued because it's growing at a slower rate, if it continues to slow at a slower rate, for example, if it goes from, say, 35% to then, say, 28%, to 21 and so on and so forth, obviously, yes, Facebook is trading at a higher multiple, but this is normally due to, just the cost structure, the shift and the time lag it's going to take to really focus on their new, scheme with focusing on, say, stories as opposed to feed ads. And I definitely don't think that that's as bad of a point as people are making it out to be, but, that's beside the point. Moving on. Further direction going forward, they're pretty much talking about their ad focus movement. And so right now they pretty much look at the Facebook feed for their advertisements as mature, and they don't really need to do much to that. Right now they are pretty much wrapping up their Instagram advertisement place, so they're getting much better at it. They've talked about how they're learning a bunch of new things about Instagram and how they can, similarity relate it to their Facebook feed, but now how Facebook, because of the stories, has a couple of little quirks with it. And so as Instagram matures, they're going to Messenger next, what they're already working on. But the majority of things that they're doing for Instagram story, they plan on doing for Messenger story. So that'll save them a lot of time. And then their next, way down the pipeline is focusing on WhatsApp business. And that's going to be focused around, especially internationally, small businesses that are really trying to reach out to their customers, really just trying to figure out what exactly other businesses are doing, what, end customers really want out of the business. So things like that, and that's kind of the next big app that they plan on really innovating on. In Europe, so they experienced major slowdown in Europe, and they did not say, at least to this point, that because the majority of the GDPR, once it rolled out in Europe, that was not fully rolled out when their quarter ended. So they do not think that the majority of their slowdown was due to that. They do think that their user base is going to slow in Europe because of that, because they're going to have to be changing a lot of things, especially around security. But at least as of right now, that isn't supposed to have had an impact on it. So that just shows that user growth in Europe is slowing, but they've had struggles with, really getting users on Europe to really get on board with Facebook and Instagram to begin with. So that's just kind of a side point. And they do expect margins to slow down over the next couple of years to about 30%. And now, when they were asked about this a little bit more in depth, they said that it's not going to be, say, within the next 2 years, but it's not going to be in, say, 5 years. So it's going to be anywhere between 3 or 4 years. You can expect their current margins to go down to about 30% from their current 40%. And that does not include any other growth driver that they're going to be, say, experimenting with or possibly adding in the future. So, for example, if Oculus becomes more profitable, if Instagram becomes more profitable, WhatsApp business, anything like that, that margin, could possibly only, say, it would, rather than being shrinked down to 30%, I could see that realistically getting, lowering down to about 35 to 33%, but not really going the full 30%. And that's assuming that none of the growth drivers that replace their current revenue streams become even more profitable. So again, there's a lot of things that long-term, I do think that their profit shrinking or their margin shrinking is just going to kind of be washed out in the long term. But that is something to definitely think about, at least if you're an investor right now and you don't want to, say, hedge on Facebook's future and you're just going off of what is said right now. Do expect margins to take a dip over the next couple of years. So that's it for my recap on Facebook's Q3 earnings report. To be honest, nothing in this earnings report really swayed me as an investor one way or another. My investing thesis and why I'm invested in Facebook still stands. And I honestly don't think that there was anything, that tangible that came out of this earnings report that we didn't already see coming. So that's kind of it. I'm not really doing anything with my position, not really changing one way or another unless the stock price moves extremely volatile in the next couple of weeks. So that's kind of it. Hope you guys got some use out of this. If you guys have any questions, are you guys a Facebook shareholder? Let me know in the comment section down below. I'd love to hear you guys' thoughts on the earnings report. What did you guys think about it? Did you catch something that I might have missed? And if anything else, make sure to like and subscribe if you stuck around to the end of the video. And thank you guys for watching again, and I'll see you guys in the next video. Peace.